Hey everybody, it's Aaron Norris with the Norris Group. It is November 1st, Dia de los Muertos. It's Friday, and what is the scariest real estate story you've ever heard? That much more as we cover the biggest headlines in real estate. Don't miss the radio show and podcast this week. We have part 5 of I Survive Real Estate now on Amazon Prime. If you are a subscriber, you can check out the entire show unedited, uncut. Actually, it's edited, but it's just uncut. You can watch the entire thing. And while you're there, please rate us. We also just posted the 2018 Financial Tactics Brunch. If you enjoy it, please give us 5 stars and review, and hopefully you really enjoy the content. Up this week for I Survived, how does the lending industry look at fringe customers? Is there an underserved market where people are not getting yes answers and should be in the lending department? With the way things are going in California, why don't we have soaring prices? What negative interest rates will do to the economy? And could we see a recession in the coming year? You won't want to miss that on the radio show and podcast. The Mortgage Bankers Association predicted purchase originations will increase 1.6% to $1.29 trillion in the next year. The Mortgage Bankers Association also reported mortgage applications increased a little bit last week. The Fed cut interest rates for the third time this year. The central bank lowered the benchmark interest rate 0.25 percentage point to a range between 1.5 to 1.75%. Fed leaders don't believe a recession is on the horizon necessarily, but instead their reasoning for cutting the rates was an insurance to give the economy the extra protection during times of uncertainty. Okay. According to First American Real House Price Index, 2 major forces helped reshape housing affordability this year, namely mortgage rates and income growth. The index measures the price changes of single-family properties throughout the U.S., adjusted to the impact of income and interest rates. So basically, this is just looking at affordability at a national, state, and metropolitan level. As rates have fallen in 2019, the economy has continued to perform well, resulting in tighter labor markets and wage growth, which has been good. Wage growth pushes household incomes upward, which were 1.5 higher in August, meaning house buying power also moved up an additional $5,600 in the last 8 months. HUD Secretary Ben Carson is expected to rewrite a rule that would encourage local governments to reform the exclusionary zoning rules that stand in the way of affordable housing. The rule, Affirmative Furthering Fair Housing, or AFFH, was finalized in 2015. It uses the Fair Housing Act to effectively tie HUD funding to whether jurisdictions are effectively undergoing patterns of racial segregation. But the AFFH rule did little to loosen the grip of restrictive housing policies. It didn't right the wrongs of redlining. It just created more paperwork for cities who wrote tons of toothless assessments. So by rewriting the rule, HUD will try to seriously address the affordability crisis for minority and low-income Americans, for all Americans to enjoy housing. This will be interesting considering all the bills that just passed for housing in California. We're working at a statewide level to digitize and standardize a lot of the housing policy and record keeping here. So I'm sure this will come into play, and communities who don't fall in line, we might not get as much HUD funding, so they better get it together quickly. The Continuum Residences in Miami Beach is turning to never-been-seen NASA photos to attract people to their luxury buildings. They have partnered with local collector Rudolph, I think it's Buja, to show his private collection of 8,000 pictures from NASA that have never been seen in the public. Another example of developers having to get very creative to attract foot traffic and hopefully sales. Whether or not it works, I don't know. Other amenities luxury real estate developers have tried include exclusive indoor skate parks, kayaking docks, private supper clubs, and vitamin C infused showers. Every year there are some fun Halloween stories, and we covered a few this week. Inman tells us that millennials are 13 times more likely to buy a haunted house because they get maybe a little bit of a discount on a stigmatized home. So good on you. It's not because you like ghosts. Zillow tells us that your home is haunted. If your home is haunted or has a sketchy past, only 4 states even mention paranormal activity in their real estate disclosures laws, and that's New York, New Jersey, Massachusetts, and Minnesota. So if you've got a paranormal problem, you might have to disclose that. Check with your state. Finally, Yahoo tells us that nearly half of you fraidy cat real estate owners would sell your house if you believed it had a ghost. Apparently, you're not afraid. You're a Ghostbuster, apparently. So let me think. I'd like to hear your favorite scary house story. Could be any kind you want. I think mine, I remember I was in junior high and there was somebody in our house wallpapering, and she quit doing a wallpaper job down the street because scissors were flying off the ladder across the room in an old Victorian home that she swears was haunted. I thought that was pretty scary, and I thought the house was scary even before I heard that. So there you have it. I'd love to hear your favorite scary real estate story. Leave your comments below. If you're on YouTube, please leave a comment below and don't forget to like the video and subscribe to the channel so you don't miss a beat. If you're on Facebook, please don't forget to not only like the Norris Group page, but don't forget to add us to your See First list and with notifications on. Leave your comments below the video. And if we miss something, share the story on our comment sections on either YouTube or Facebook, and we'll make sure to include it on our blog at thenorrisgroup.com/blog. We only have a few more events you're going to be able to catch us this year. On November 12th, I am doing our innovative real estate for Tigar in Corona. If you're a realtor in the area, I'd love to see you there. I'll be talking about iBuyers, what you're up against for the realtor and investor community, and I just redid all the data. I'll show you how they're flipping, what they're flipping, where they're flipping. You won't want to miss it, especially in the Inland Empire. We've got the most competition from 4 iBuyers, so I'll cover it there. I'll also be on November 21st at the Innovative Real Estate Marketing, doing that talk at Pasadena Phoebe, so if you're in the LA area, you'll catch me there. February 1st, please mark your calendar. Turmoil, the coming storm of negative interest rates. Bruce Norris will be doing our all-day timing seminar, and I think this one is going to be a little bit different. We'll have more information coming soon. Also mark your calendars, March 19th and 20th. We will be back in Florida doing our Florida Buying Boot Camp, but you don't have to wait to sign up till then. It's a little bit of a process. You do a one-on-one with Bruce Norris. You get access to 8 hours of education. You get a 200-page book. And the trip in March is just us going out there with you, showing you models, meeting the builder, all that kind of stuff. Even if you're just interested in investing out of state and don't know where to start and want to see the process that we've put together to help investors do that, you might be interested in going through the process. For more information on all of our events, check out thenorrisgroup.com and check out our live events section. For more information on hard money loans, including fix and flip, buy and hold, new construction, and private lending, even for accessory dwelling units in California and Florida, check out that hard money tab. And for passive investing with trust deeds, mortgages, and notes, check out the invest tab on our website. With that, have a fantastic weekend, and we will see you next week.